That is the introduction to macroeconomics, right? So just I am sharing, already shared the screen, right? So it is displayed properly. So this is the syllabus. There are 4 units in this syllabus, right? So first is the introduction to macroeconomics, national income accounting, and second unit is the money, and third unit is inflation, and fourth unit is the closed economy in the short run. So today we are going to discuss the first unit, that is introduction to macroeconomics, right? So what are the referred books in this, right? Enter the syllabus. These are the referred books. That is the Abel and Bernanke, Crosier. That is the Macroeconomics Pearson Education. And second book is Oliver Blanchard, Macroeconomics, 7th edition. And third book is Don Bush Strud, and that is the macroeconomic. Title of the book is Macroeconomics, McGraw-Hill. And other than that books, Mankiw book, that is the macroeconomics. Okay, learners, these are the important referred books. Okay, so now we are going to discuss today's topic, that is the introduction to macroeconomics. Dear students, first we need to understand that what is the economics, right? And what is the different distinctions of the economics in, like you can call as microeconomics and macroeconomics. The previous semester, maybe you students are learned the microeconomics, all the chapters. So in this semester, we would like to learn that macroeconomics concepts, right? So that's why in the first unit, which we are discussing, that introduction to macroeconomics. First, before going to that macroeconomics, we need to study what the economics is, right? Already students are learned what is the economics. The economics is the studies as how to the society can allocate its limited resources most efficiently. What economics? Economics is a household management. In the initial stage, you learn that economics. There are 2 words coming from the Greek word for the economics word, right? So that means how to can manage the things, how to can manage the decision making about what is the availability of the resources, how you can utilize that efficiently. So in economic terms, economics is the studies as how the society can allocate its limited resources most efficiently. So the field of economics has been divided into 2 distinct areas of study. One is microeconomics, another one is macroeconomics. Got it? So what is the microeconomics? Microeconomics deals with the behavior of individual entities like individual consumers, individual market, individual farm and household, and so on. That means in microeconomics you learn the individual decision making about how you can utilize the resources as a efficient manner. And other than microeconomics, the another distinct of the economics is that is the macroeconomics. Right? What the macroeconomics? Macroeconomics is concerned with behavior of the economy as a whole, with booms, recessions, economy's total output of goods and services, the growth of output, and the rates of inflation, unemployment, and balance of payments and exchange rate. Okay, so look at here. So that means macroeconomics is concerned with behavior of economy as a whole. Earlier in microeconomics, you learned that how the individual decision making to take according to the resources. Now, what the economy has to take the decision making about to how you can utilize the resources totally. So that is the behavior of the economy as a whole. It studies. Like example, sometimes total output, sometimes total goods and services. Sometimes you can learn that what is the growth of output, what is the rate of inflation, unemployment, balance of payment, what is the prices in the economy, what is the exchange rate, what is the export, what are the imports. So other macroeconomic concept which we are learned on economy as a whole. So that in this semester we learn that macroeconomics, it deals with the economy as a whole. So entire this first unit, we have to cover these 3 topics actually. What are the 3 topics? What macroeconomics is about, and what macroeconomists to do, and why macroeconomists disagree. What is the point? So, according to the Abel Bernanke book, so entire this chapter, there are 2 units. There are 2 chapters in this unit actually. First chapter is introduction of the macroeconomics. What macroeconomics is, how you are studying. Second part is that is the national income accounting. That is next class we will discuss. Right. So coming to the point. So here, first, what macroeconomics is about. In this part, we learn some subtopics like definition of macroeconomics, and after that we can learn that the difference between microeconomics and macroeconomics, and after that we would like to learn that basic issues in macroeconomics. And second part, that what macroeconomics to do. Macroeconomics to do forecasting and also data collection and analysis, macroeconomic research, and so on. And third part, which we are learned, that why macroeconomists disagree. Sometimes some economists are agree with the some theories, some concept. Some economists are not agree. Said that is disagree. How different theories are different concept, which different economists. Sometimes it is agree, sometimes it is not agree. So in that case, we have to learn that what is the classical approach and what is the Keynesian approach too. Right. Next, coming to first part, we have learned that what macroeconomics is about. What is the macroeconomics? The macroeconomics is a branch of economics. It examines the economic behavior of the aggregates. That means behavior of economy as a whole. That means it examines the economic behavior of the aggregate. Aggregate means sum of the all the total income, total output, total demand, aggregate income, total saving, total investment, rise, fall in general price level, and interest rate, so on. What is the point? So earlier microeconomics studied that individual income, individual demand, individual saving, individual investment, so on. But now total demand, total supply, total output, and so on. That means economy behavior of aggregate we can discuss in here. So generally, what is the scope of the macroeconomics which we are studying here? The scope of macroeconomics which we are studying, some theories or some basic concepts are, that is the theory of income and employment. Within that, there is a subtopics which we are supposed to discuss, that theory of consumption, theory of investment, and theory of trade and business cycles, and theory of general price level and inflation, theory of growth, and theory of income distribution. These all are about the macroeconomic theories, concepts here. Right? Coming to. So now we are discussing about what the differences between the microeconomics and macroeconomics. What the microeconomics, what the macroeconomics. First, you can start with macroeconomics because we are discussing macroeconomics. Already we learned the microeconomics the previous semester. Right? Dear students, you can understand that macroeconomics, it studies the structure and performance of the economy as a whole. It is discussed or examined the economy as a aggregates. It analyzes the economy as a whole. But in microeconomics, it studies the structure, performance of individual economic unit. It analyzes individual components of the economy. Right? So another point which we are discussing, macroeconomics is concerned itself with choices made by the macro players of the economy. Who are the macro players in this macro level? That is the government. The government itself, it is the central government or state government, local government, panchayatis, whatever it is. Central bank, extra, so on. Right? It is impact of those choices of economy as a whole. How their policies, how their decision making about the entire economy. So that macroeconomics if we are concerned. In micro level, it focuses on the choice made by the individual decision making units of the society. So typically the consumers and firms. So here we discuss about the choice decision making about individuals. What the individual consumer take the decision about the allocation, what the individual farmers or the producer has to take the decision about the individual, right? Decision about the resources or whatever it is the choices, right? The another difference is macroeconomics is the top-down approach and microeconomics is the bottom-up approach. Top-down approach means the top-down approach, it shows that here whatever we are taking the decision making, that first we need to write concepts or the theories that will be reflect to the society. That society which will be directly it is impact, how it is impact, with the positive impact or the negative impact. Finally, you can get the result. Okay, that is the top down approach. Top down approach means, right, first result. First, you can give the policy. That policy, how it is impact to take the decision making, how they're getting the benefited. Suppose example, in this case, example I can give you that if the government has to give in the one program or any kind of right. Suppose example in COVID-19 crisis, the government has to give in the stimulus packages. That means the government has to give the some money transfer to the below poverty line population. They give the policy, it will be reflected to increase the level of income. If they increase the level of income, the purchasing power will increase. If the purchasing power will increase, they can demand the goods and services. So the policy implemented, the final result is the economy is sustained. That is the top-down approach actually. What is the bottoms-up approach? Bottoms-up approach is in the initial stage, we are expecting that result actually. That means price, you can fix the price. According to that price, whether you can price increasing or decreasing, whether the demand is increasing, the supply is increasing, the demand consumers are purchasing more. According to that, you can increasing the price or decreasing the price. Bottoms up approach. Bottoms up approach means first we can fix the price. According to that, demand increasing or decreasing. According to the price increasing or decreasing, they can take the decision making. Bottom say decision you can take it. Got it the point? Top-down approach and bottoms-up approach. So top-down approach is related to macroeconomics. Bottoms-up approach is related to microeconomics. Next, macroeconomics is concerned about the study the overall price level, overall prices of the goods and services. But in microeconomics, it studies the individual prices. That means the individual price, one price of good. But here aggregate price level, the all the price, that is inflation rate we can discuss in macro level. But here individual price increasing or decreasing. Okay, macroeconomics it analyze the aggregate demand and aggregate supply. Obviously, macroeconomics it studies the economy as a whole. That means demand, all the sum of the demand of the goods and services you can call aggregate demand, and all the sum of the goods and services supplied, that is the aggregate supply. Aggregate demand and aggregate supply, these are macroeconomic concepts. And microeconomics, it analyzes the individual demand and individual goods and services. That means one good, one demand, one price, like you can discuss in micro. Some other way giving to the examples, you can distinguish between microeconomics and macroeconomics. Suppose in terms of the production, how you can division of the economics is micro and macro is. Suppose in the case of production, if you are talking about microeconomics, the production output is individual industries or businesses. If you are talking about macroeconomics, it's about all total production and goods and services. That means national product, national income, output, total industry output, gross domestic product, gross national product, and per capita income, personal income, and so on. In terms of the production which we are talking. Right? In terms of the price, we are talking what is the differences between micro and macroeconomics. So in macroeconomics, aggregate price level and consumer prices, producer prices, rate of inflation, and so on. In microeconomics, we deals with that price of individual goods and services, price of the medical care, price of the gasoline, and price of goods, food prices, and whatever it is. Right? So with example, how you can divide these two distinctions of the economics, micro and macro. In terms of the income, how you can divide micro and macro. In terms of the income, we are talking about some of the all the income, that is you can call it as national income. We are discussing next class that national income is what is the concept and how you can measure national income and so on. Okay. Next, total wages, salaries, total cooperative profits, and so on. And inflation, unemployment, or how it is, right? Later we can discuss. So in microeconomics, distribution of income and wealth, wages in the auto industry, minimum wage, executive salaries, and so on. In terms of employment and unemployment in the economy, and total number of the jobs, unemployment rate, these are the situations which we are observed in recent pandemic situation. What is the employment rate is, what is the unemployment rate is, what is the job opportunities. So these all macro level we are observed that the employment rate is increasing 26 to 36%. Whatever. Earlier it is 26, now it is 28, 30, 36%. Why? What is the reason? The reason is due to the pandemic, there are so many industries sick, and industries come down due to the demand of the goods and services, and so on. In macro level, in micro level, employment by individual businesses, individual industries, jobs in steel industry, the employees, number of employees in a firm, and so on. So with example also, we can divide it into different distinction of the economics, that is the macroeconomics and microeconomics. Okay. Next, coming to the what macroeconomics about, in that part we are discussing third party, that is the macroeconomic issues. What is the macroeconomic issues? The issues that macroeconomists address, they including the following. What are the macroeconomics? In general question, actually, these are the questions which are came into our mind as an economist, as a macroeconomist, right? Dear students, what determines the nation long-run economic growth is the one question. Macro, because it is we are talking about macro level. What is the growth of the economy in Indian economy, or you can say Indian economic growth rate? What is the growth of the Indian economy? With the long-run economic growth, is what are the factors to influence? That is the one question issue, because our growth is always fluctuated. Sometimes it is increasing, sometimes it is declining, sometimes it is stagnant, sometimes going to negative. Because this situation we are observed since 2019, and also earlier 2000, you can observe that the trends in the growth of economic growth in 1950 onward. You can observe the growth trends of the economic growth. It is growing, increasing or decreasing. What are the factors to influence? That's what we are learned actually. What are the factors to determine the long run economic growth? That is the one question, one issue which we are discussing. Second is, what causes a nation's economic activity to fluctuate? Economic activities, like each and every economic activity, that is the it fluctuated. Growth, unemployment, what are the growth of the sectors, agriculture, industry, service sector, sometimes it is increasing, decreasing. So nation's economic growth is fluctuated. Why? What are the fluctuations will take place? In that case, we need to discuss that business cycles. Business cycles related to the long-run fluctuations, that booms, recessions, recovery, and so on. We will discuss one by one. Okay, this question is arise due to how the nations has to fluctuate. What causes to nations the economic activity fluctuate? And third issue which we are addressed as a macroeconomist, that is the most important problem which we are faced, that is unemployment. So what is the employment rate? How you can calculate? How you can measure? So how you can reduce this unemployment? What are the policies which we require to reduce the unemployment? What are the causes to unemployment which we have to learn? So this is also the basic macroeconomic issue, right? Next, coming to the fourth concept, that is what causes the prices to rise, right? The prices is increasing. In real life, you can observe that the before COVID-19, what is the prices of the goods and services, and after COVID-19, what is the prices of goods and services? So if the prices are increased, yes, we are observed in real life, in your life. Maybe each and every student have to take into your consideration your life. You are observed what the market is, what the economy is, what the prices is going on. Whether the price is increasing or decreasing. Of course, it is increasing. Why it is increasing? What are the causes to increase? That we have to address what are the causes of the prices rise. So that case, you can discuss about what is the inflation, how you can measure, and how you can control the inflation. What are the policies to require, right? Like these are the basic issues which we are discussing. Next, another issue which we are stress by the macroeconomist, that is, how is a nation's economy affected by being a part of the international economy. That means if the national economy is affected part of the international economy, if you are right, the economy is produce the goods and services, purchasing and whatever it is, the exporting, importing, taking place within the domestic country, that is not affected. If sometime, if you are right, exchange the goods and services to the rest of the countries, other countries, so how it will be affected to the nation's economy, right? So that means we are discussing about open economy, closed economy. There are two parts. Closed economy means whatever it is, the economy's exports and import taking place, exchange of goods and services taking place within the domestic country, that is you can call as closed economy. Open economy is our economy is open. You can export any goods and services to any country, or rest of the countries to import the goods and services. Exports, imports were taking place in rest of the countries. That is international economy. So if you are going for international economy, how will be affected the nation's economy? So that we are discussing. If national and international economy is taking place, what is our economy is affected? That is also more important. Next, last point which we are discussing, that can the government do anything to improve economic performance? Yes, of course. So what the government is role to play? The government has to sustain the growth and to improve the growth rate. Sometimes whenever they can find that the fluctuations of the economy. So of course the government has to do the economic performance, that through there are two policies, the macroeconomics policies like monetary policy and fiscal policy and so on, right? So according to these basic issues which we are identified in the macro level, according to these basic issues, we are key macroeconomic issues more detailed. That is the 6 macroeconomic issues are long run economic growth, business cycle, unemployment, inflation, the international economy, macroeconomic policy, the long run economic growth. Okay, first we discuss that what is the long run economic growth, right? Key issue which we are stressed. We already discussed that, what is the long run economic growth. Long run economic growth means how the fluctuated in the economy, the basic issue. So what is the economic growth? We are number of times we are discussing economic growth. Economic growth is the increase in the amount of goods and services produced in the economy over a period of time. Generally, there are two terms. One is the economic growth and economic development. Right. So economic growth is increasing the level of amount of goods and services produced within a period of time, or economy over a period of time. Right. And economic development, the economic growth plus structural and economical social development of the economy over a period of time. So some countries like developed countries, some countries like underdeveloped countries, which we are talking. Sometimes we are observed some newspapers and all. So economic growth means the countries have the highest level of the growth in terms of all over development. That means that countries you can call as developed countries. If some countries have long run economic growth is high, so that countries you can call as economic growth countries or developed countries. Those countries very less economic growth rates, or economic growth is less, that over period of time growth is not that much increased, so there is a fluctuation or taking place. That countries you can call like economic development. Example, economic growth example or developed countries example, Japan, right? USA, Singapore, Thailand, that countries you can call as developed countries. What about other countries? Developing countries. Developing countries like India, Sri Lanka, Pakistan, some other countries, so Sri Lanka and so on. So economic growth is the one parameter. The long run increasing level of growth rate, or the long run increasing level of amount of goods and services produced in a over period of time. It is taking place, the quantitative change is taking place in the economy. So the economic growth is measured in terms of the real gross national product. That is been called as GNP. Nowadays, we are observed the newspapers, GDP growth is this much level at present, right? 7.8, 7.3, 7.5, so 7.3. Earlier, in 2011 and 12, the highest level of the growth rate, 10% growth rate, right? And 2000 before COVID-19, the growth rate is 8.5, 8.7. Now the growth is 7.3, 7.4. So the fluctuations were taking place. Actually, when the country is developed, when there is a long run economic growth is taking place over a period of time, that is, the country is growing or the country is developed. So that it is different from the economic development, because economic growth is different from the economic development because it is economic growth including the structural, economical, social changes taking place in the economy. So here we are discussing long-run economic growth was fluctuated. What are the factors to influence that long-run economic growth? These are the factors actually. Dear students, you can understand that. The factors which we are influencing the long-run economic growth are the availability of the resources, efficiency of the labor force, efficiency of the capital, and the rates of investment and saving in the economy. Right? First, availability of the resources. The exploitation of the natural resources, increase in the workforce, capital stock, contribute to the greater output. It will be increase the long-term output. So, availability of the resources, either the human capital or either the resources like workforce resources, capital resources, whatever it is influenced to increase the greater output. Second source, efficiency of the labor force. Of course, the education, training, experience increase the average labor productivity. More labor productivity, particularly the working force participation, will move or will greater the output or greater the economic growth rate. And next, efficiency of the capital. Capital in terms of improvement in knowledge, technological change, increase in productivity of land, missions, buildings, and so on. Right? So here we are discussing that. Right. So what is the rates of investment saving in the economy? Other factors which we are influenced that long run economic growth are rates of investment and saving in the economy. Right? So we can look at what is the rates of investment savings. That means more investment will lead to more economic growth rate. More saving will lead to more economic growth. So we are discussing each and every concept in coming classes. Okay. So these are the factors which will influence the economic growth rate long run. Second issue, basic issue is that is the business cycle. How the national economy fluctuated. So business cycle which we are discussing. What is the business cycle? So already we discussed earlier, and increasing the availability of the resources to improve the efficiency help to country to register an upward trend in the long run economy. What is the point? So business cycles are the long run, short run fluctuations that you can call it business cycles. So this is not only for economic growth but also for other macroeconomic variables such as inflation and unemployment. It will be displayed. So what is the definition of the business cycle? The business cycle is defined as the more and less regular pattern of the expansion and contraction economic activity, the path of trend growth. Suppose example, here there is a business cycle diagram. I think it is visible clearly. So look at here. First there is a line. That line you can call as long run growth rate, how it is going. Okay. So this is the line expansion. Initial stage the growth rate is increasing certain time, and sometimes the growth is going to peak. Peak means the growth is increasing more at maximum level. Certain level after that the growth rate will declining. Again there is a growth rate declining, that's going to whatever the growth is minimum growth. The line is this is the line you can say that the minimum growth. It is going to recession. When there is the trend of the declining growth rate, that is called as recession. Okay. When there is increasing level of the growth rate, that is the expansion. Expansion, recession. That is very impressive or that is very important in every country. Whenever the growth rate is going to the minimum level of the growth rate, below the growth rate, so that means the country is going to depression. So when there is a negative growth rate, it will take place. So up to this line, that is the positive growth rate. Above that line, it means positive growth rate. The growth rate is increasing, or sometimes it is decreasing. That's fine. You can sustain. But when there is a growth rate is below that line, that means the country is going to depression. The depression will take place because of the negative growth rate. This situation which we are observed at the time of the COVID-19 pandemic situation. There are so many times in Indian context. We are talking about 2008 crises, and even through First World War, Second World War also, we are facing the low level of the GDP growth rates. Depression is depression. And after some years, the growth is fluctuating, improving. That is, you can call it a recovery. When the growth is improving, that is, you can call it a recovery. And after some time, the growth is improve more. That is the expansion. Expansion means the growth is increasing tremendously. And after that, the growth again, the fluctuated. So the fluctuations were taking place in the short term period. That is, you can call as business cycle. Okay. So you can observe during the past 5 years, we often came across the term recession in the social media. The recession simply refers the downward pace of the business cycle. Downward pace of the business cycle below the growth rate, minimum growth rate, particularly which the national output may be falling and growth very slowly. Right? So this is the business cycle, the fluctuations were taking place in the every country. Okay, that is the macroeconomic issue. The another important macroeconomic issues are that you can call unemployment. Okay, unemployment is occurs when the people are without work or activity seeing work. What is unemployment? Unemployment is the rate at which the people willing and able to work, but they couldn't get the work. Simply say. Another term you can say unemployment is a willing and able to work, seeking work, but they couldn't get in the work. Simple. That is. So the prevalence of the unemployment in the economy measured unemployment rate. How you can calculate it? Unemployment rate. You can calculate it. Unemployment rate. Unemployment rate is the percentage by dividing the number of employed individuals by all individuals currently in the labor force. Suppose unemployment rate is equals to number of unemployed persons upon by labor force. Labor force means both including employed and unemployed persons. What is the point? So both number of employed and unemployed person is labor force. So first number of unemployed persons, how you can get it this number of unemployed person? You can get it how many people are working. Okay? In employed, unemployed. So you can get the unemployment rate. Now unemployment rate is 27 point something. This is increasing tremendously. Why? There are so many reasons. So India is facing still underdeveloping country because unemployment is also one of the basic issue. Right. Next, another basic key issue is that the economic indicator inflation. Right. What is the inflation? Inflation is the average level of the prices increase over a period of time. As simply say, the percentage increasing the average level of the prices over a period of time, that is one called inflation rate. Always we are observed in newspaper, TV news, and social media and so on. Right? So the prices increasing because of there are so many policies or so many factors to influence. Right? So factors are like consumer behavior, like purchasing power party is one factor. What is the purchasing power party? The consumer we are increasing our purchasing power, increasing our demand for the goods and services. When we are increasing, whenever we have the more income, we have income, you can consume more goods, that will be reflected to increasing the level of prices. Okay, if the inflation rate is consumer price 10%, then when average prices of the item is consumer by rises by 10 per year. Okay, that means inflation rate is increasing 10%. The average prices of the items should be also it is increasing by 10%. Sometimes this inflation you can call different types of inflation. Sometimes we are facing high level of the inflation. That means the price level is increasing more than 50%. That is the high inflation or higher inflation you can call. Higher inflation. Inflation, walking inflation, dipping inflation, right? Hyperinflation, different types of inflation which we are studying. There is a one concept, inflation concept. At that time we are discussing in detail. Okay, so inflation rate is also one basic indicator of the economic growth. That's what we are discussing. The inflation opposite word, that is the deflation. What is the deflation? The deflation is the fall in the average level of the prices. So increasing level of prices you can call inflation, and decreasing level of average price level you can call deflation. Opposite. So when we have to find this, whenever the prices are declining, at that time the government used to different policies. Whenever it is the price declining, when there is a low level of the income levels in the economy, low level of the money supply in the economy. So there is no money, there is no purchasing power. There is no purchasing power, the price will. There is no demand of the goods and services. There is no demand of the goods and services, the price will fall. Okay, even supply is more. So the deflation also nothing that existing. It is a kind of falling prices reduce the incentive of the all the goods and services. Okay. Next is another important issue is that is the international economy. Okay. Today every major economy has an open economy. Open economy is the economy is open. Everyone can purchase it and take it and export and import. That is the open economy, right? Which means that it has extensive trading and financial relations with other nations. Like example, in India, you can export goods and services to rest of the countries like USA, Japan, Singapore, some other countries. And also, you can import some raw materials from the rest of the country. So that means whenever you can open your economy, imports were taking place from the rest of the countries, that you can call as international economy. So point is how it is reflected to the within the economic growth. Yes, the economy growing increasing because more export, right, will lead to getting more income levels. More income level will lead to positively national income is increasing, right? So that will be positive impact in the economic growth. What is the point? So the macroeconomy studying international economy would be interested in knowing how the economic links among nations, such as international trade, borrowing, affect the performance of individual economies, the world economy as a whole. Okay. Next, last point is what the macroeconomic policies are. An extremely important factor affecting economic performance of the country is that is the policies pursued by the government. Macroeconomic policies are affect the performance of the economy as a whole over a long period of time. Of course, in every country, the government policies are major role to play to performance the economy as a whole. Generally, in every country, they are using two major policies which are taking place. One is fiscal policy, another one is monetary policy. What is the fiscal policy? Fiscal policy is the policies concerns about the government spending and taxation, spending and income. You can say expenditure and revenue and expenditure. And fiscal policy is determined at the level of the national, state, and local level as well. What is the point? What about other policies? That is the monetary policy. What is the monetary policy? Monetary policy is the policy related to supply of money, control supply of money by the central bank. What are the factors to determine? They determine the rate of growth of the money supply in the country. The factors are the supply of money and demand for money. Okay, so the monetary policy is the policy related to control the supply of money. How the control supply of money? It depends upon the factors to influence in the economy, what the economic performance is going. So these policies which we are discussing. Okay, this is the first part of the macroeconomic. What macroeconomics is actually is about to. Second part which we are discussing, what macroeconomics to do. In general way, we are talking about the macroeconomics to do. Teach macroeconomics in college or school level, engage in macroeconomic forecasting, and work as analyst to government private organizations, enter the research arena of macroeconomics, collect data related to macroeconomic variables. These are the general observations which we are in real life, right? According to these generalizations, you can point it out that there are four basic, right, points which we are macroeconomist has to do. But the macroeconomics sometimes forecasting. Forecasting means predicting the performance of the economy, right? That means the economist has to trying to forecast the performance of the economy will concerned with the questions such as how the economy growing during the COVID-19 crisis is, right? Predict during the COVID-19 what is the economy is. Is it negative growth rate, positive growth rate, it is increasing. And after COVID-19, what the economy is growing? It is increasing due to some policies taken by the government or some other business organizations to taking place, some other factors to influence. So forecasting means it trying to predict the long run fluctuations or short run fluctuations. What is the point? So how the economy is sustained or it is perceptive, that is the pessimistic and scenarios, whether it is the increasing or decreasing, or this is forecast. Forecast means predictions, you can say. Predictions means you can observe whether it is increasing or decreasing according to your policy. As a macroeconomist, always observe as a forecasting. Next concept is macroeconomic analysis. Macroeconomic analysts monitor the economy, think about the implications of the current economic events. Suppose example, private sector organizations like banks, large corporations, they observe that they analyze that how the job of the analyst to try to determine the general economic trends to their employees or investors, and some public sector agencies to analyze what the government and what the World Bank or international banks are to main functions they're working, and to analyze what is the policy making this, about the government to improve how it is work, whether the growing increasing, whether the growth is increasing according to that policies, whether it is decreasing, all the analysis which will take place on the basis of data quantitatively. How you can analyze the data? Quantitatively. Earlier growth rate is this much level, 9%, 10%, now the growth rate is 7%, but during the COVID-19 only minus 2.5% or 4%. These were how you can analyze? You can analyze the in terms of the quantitative data. The data should be you can collect it, and you can analyze the things which you are taking place. Next, another point is macroeconomic research. The macroeconomist to do another basic role to play. Engage the research. Research means search for new things, search for new knowledge, search for new discoveries, you can say. That means the macroeconomist to search for, suppose example, in COVID-19 crisis, we are observed that the economic growth rate is declining. How you can find? You can find that there are so many factors to influence, particularly the people are low income levels. The low level of income, it will leads to there is no purchasing power. There is no purchasing power leads to the demand for goods and services declining. Declining the demand for goods and services, that will leads to the supply of output will decline. Supply of output will reflect it to the factors of production will decline. Less factors of production will be placed, and that will kind of unemployment is increasing. Really, unemployment rate is increasing. How you can say? There is a research, there is an article, there is a publications, there is a reports which were taking place during the particular period. So the research, according to that research, the government has to take the decisions or the policies to which we are control that particular problem. How they control? They can give the policies like fiscal policy and monetary policy. Fiscal policy, they can increasing their income levels. How they increase income levels? They increase their income levels on the basis of they given the stimulus packages. That is they're given in 2019 crisis, 19 pandemic situation. They're given the stimulus packages to all the household sector, farm sector, and other industries, service sector, so on. So that their income level increase the level of income level, so that their demand goods again, the employment will take place. So like that, the researcher has to give the some policies or the suggestions to improve the what economy is. So that's why macroeconomist has to search new things, new policies, new discoveries. It will help to increase the over long period of time that growth will automatically increase. Next, data development. Data development is also several macroeconomists to involve the processing of the collection of the data. As an economist, we have to collect the data, to analyze the data, to show the what is the growth of the country or the growth of the other factors too. Okay, and the last is the concept of the last point in this unit is macroeconomists disagree. I already discussed with you. Some economists agree, some economists disagree. What is the agree? What is the disagree? That in that case, there are two words which we are using. That is the positive economics, normative economics. Right? So we can provide the insight into the macroeconomic disagrees. That is distinction between positive and normative economics. Okay. So what the positive economics is? Positive economics is express what is. Normative economics is express what should be. That means, example, in the COVID-19, in COVID-19 crisis, positive economists said that what it is, that is the COVID-19, that's it. They couldn't analyze anything, positive economists. Normative economics, what should be, how it is came, it expressed that what should be. That means what it is happening, how it is affecting the economy, and how you can control. It is showing that suggestions and all. So that is normative economics. Okay. And also positive economics is based on the cause and effect of facts. But normative economics, it is based on the ethics. That means positive economics means what is the cause, what is the effect. They can express the positive economics. But normative economics, it simply say that in ethics. Right? Another difference is positive economics, it deals with actual and realistic situation. And normative economics, it is idealistic situation. Okay? Next difference is it can be verified with actual data, and normative economics it can be verified with not actual data, simply say. Positive economics in this value judgments are not given, natural between ends, and normative economics in this value judgments are given. Okay, positive economics deals with how an economy problem solved, but normative economics deals with how an economic problem should be solved. How an economic problem solved, how should we solve this problem? There are two differences. Who is these two differences has given their different economists or approaches which we are taking place. Okay, there have always been many schools who thought macroeconomists, but the most important and entering disagreement in positive issues in two schools thoughts actually. One is the classical approach, another one is the Keynesian approach. What is the classical approach? This is classical approach means classical economist theories. And Keynesian theories means this is the modern economist theories actually. Classical theory and Keynesian theory. Keynesian theory, modern theory. So classical economists who, particularly Adam Smith, the father of economists, we know very well. The classical theories can be traced back to early 1776. The Scottish economist Adam Smith, he published his book in 1776, An Inquiry into the Nature and Causes of Wealth of Nations. In this book, they can give the idea that free market are guided by the invisible hand, which operates throughout the price mechanism. So that means entire the economies is follow the free market mechanism. Right? That means whatever it is, the price they have to take in place, and only the one factor to influence the entire output, that is the labor. Factors of production, there are four factors of production. One is labor, land, organization, and capital. Got it the point? Okay. So classical economists trusted the free market mechanism, so that only labor is the only factor to influence the entire output. Okay. Coming to Keynesian approach. Keynesian approach is the another modern economist theory. It developed that theory by the J.M. Keynes actually. In his theory, 1936, General Theory of Employment, Interest Rate, and Money. So particularly this theory came back in 1930s actually. Okay, so Keynesian economist is that is disagree with the classical economist theory. So Keynesian theory has to divide or postulate the another theory. In modern economics, the growth rate is taking place not only one labor but also other factors also influence it. So in this chapter is fourth chapter we are discussing, fourth unit actually. Fourth unit, that is Keynesian theory of income determination. And classical theory of income determination also we will discuss in the coming classes. Right? So this is what we are discussing today's class for the unit 1 first part. Okay. So up to this, if you have any kind of doubt, so I can clarify it. If you drop your question and answers here in the QA parts. Okay. Yeah. I hope you people are enjoy the class. Right? Yes. I think Sanjay Kumar has to make an announcement. Please. There is no questions as of now. Sir, please share class PDF if possible in this WhatsApp group. Okay, let you know if yes, I can join this WhatsApp group. I can send you the whatever the PPT. Yes. Is there any questions? Very good afternoon to all. And the SOL study material is not sufficient for the exam. No, the SOL study material is good. You can refer that material because the experienced professor has prepared that material. No doubt, you can prefer the SOL material. Other than that, there is a books which we are given by the Delhi University. That is the referred book. There are 3 referred books in the initial stage which we are discussing. Okay. Other than SOL, you can refer that books so that you can get the more knowledge of particular topics. Because economics always we learn there is a case studies or there is a theoretical parts actually, theoretical learning, right? That's what I discussed with you. Next, sir, can I no? So there is some other books that is we can't prefer that. Okay. Any other question? Can you please provide us anyone at least latest version of the reference book? So, dear student, latest version of the book is only one book which we are sufficient. That is ManQ book, NG ManQ, right? NG ManQ macroeconomics title of the book. Okay. Any doubt related to concept or the topic? आपने जो भी समझाया बिल्कुल समझा नहीं है. ठीक है, आप हिंदी मीडियम है तो हिंदी मीडियम में, इंग्लिश मीडियम इसलिए इंग्लिश मीडियम में डिस्कस किया. हिंदी मीडियम के लिए मैं भी अलग हो सकता है. हिंदी मीडियम में है तो बाद में हम लोग डिस्कस करेंगे. ठीक है, तो दोनों बाइलैंग्वेज भी डिस्कस कर सकते हैं. तो इंग्लिश मीडियम ज़्यादा बच्चा होगा इसलिए मैं इंग्लिश मीडियम में डिस्कस किया. ठीक है. क्वेश्चंस रिलेटेड, एनी क्वेश्चन? सर लेबर इज सुना थी पर लेबर क्या होता है? तो देखो बच्चा, लेबर इज द वन इंडिविजुअल. ओके, इंडिविजुअल लेबर. बट वी आर टॉकिंग अबाउट लेबर फोर्स रेट समटाइम. Laborer, right? Labor means individual, laborers means plural. So if you are talking about individual, that is the microeconomics. If you are talking about macroeconomics, so that's why labor force participation. What is the labor force participation? The average number of the people which you are willing and able to work, but they couldn't get the work. So that is the labor force. How many total number of the persons unemployed or employed? Sorry, employed, labor force. Okay. So which book we are purchased? So SOL material you can follow. Other than that, so there are soft copies also available. That ManQ book and Dornbusch book and also other books. Okay. Yeah. Any other doubt? Let you know. Yeah. Thank you. Thank you, Anandal. I think if you have any doubt regarding this class, so I can discuss. Please drop your message here. So to next class we are discussing that income, national income accounting. That means first unit, second part, national income. What is the national income? What are the measures to measure the methods and measures of the national income? We will discuss in next class. Right? Right. Thank you. If you have any doubt, you can drop your message here. Otherwise, you can discussing any kind of right topics in this area. If you have any doubt, generally we are discussing this concept. It's a fundamental concept, right? Right. So you must have to learn that, right? What is the macroeconomics is, right? Yeah. Some student asked me that Priyanshu Kumar Dubey. So what is current account deficit? See, first of all, you can understand that. So what is the deficit and surplus? Okay. So generally, whatever the topic today we are discussing, just introduction of the macroeconomics, some concept which we are discussing. Okay. So deficit and surplus, which we are first will learn. So when it is surplus, when there is a exports imports were taking place. Okay. Exports means the goods and services to export to other rest of the country, and you can import the raw material from the rest of the country. Whenever the exports is more than to whatever the imports, then the economy is there is a surplus, right? When there is imports is greater than to whatever the exports, then there is a deficit. Current account surplus, current account deficit. Current account deficit means there is a balance of this concept which we are discussing. There is a balance of payment concept. Okay. So I think next class, tomorrow class, we'll discuss national income. After the followed the class, we are discussing the balance of payment concept. So current account deficit and capital account deficit, which we are discussing. Whenever the export is less than to whatever the imports, so imports is more than whatever the export, so you can get the deficit, current account deficit. Okay, so that. Next, any other questions? We will discuss in. Then we ask the. What is the difference between GDP and GNP? Yes, Priyanshu, this concept we will discuss tomorrow class actually. So we'll discuss what is the concept of income. There are 4 concepts of the income, that is GNP, GDP. Okay, so GNP is the gross national product. GDP is the gross domestic product. Gross national product is it is the market value of all final goods and services produced in an economy with NFIA, net factor income from abroad. That means the payment which we are received from the rest of the country, the payment which we are taking place in the outside country. So both payments and receipts also include, that is the GNP. So there is no including of this NFIA. That means GDP minus NFIA, that is the GNP minus NFIA, that is the GDP. Okay, we will discuss again tomorrow. National income concept, right? Yeah, some students are asking, sir, depression pace in the Sri Lanka. Yes, is it correct? Yes. Nowadays we are observed the Sri Lanka is facing the depression period, right? The government was also looking at offline classes, right? Circular flow of income. Yes, sir, you teach circular flow of income. Yeah, tomorrow if you have time, definitely I will teach. Okay. Yes. So tomorrow don't miss the class, because tomorrow is very important concept that will be reflected to other topics too. Okay. So please join tomorrow class. Thank you. Thank you, one and all. So still, if you have any kind of doubts, yeah. So what is the syllabus? Syllabus is discussion the first. Okay. Thank you. Thank you, one and all. Yeah. Take care, all of you.
ओके सर, ऐड कर दूं?
हाँ, ऐड कर दो सर.
ठीक है सर, थैंक यू.